Demand for homes is staying remarkably strong as we approach Thanksgiving. That's keeping prices elevated with great opportunities for sellers. We'll take a look at inventory and prices and latest on the market in this week's Altos Research Real Estate Market Update. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and we make that data available to you before it becomes visible in the traditional data channels. It's Monday, November 15th, and here's what the data tells us right now. Active inventory declined 1.7% this week to 393,000 single-family homes unsold on the market. The next couple of weeks, as we enjoy Thanksgiving and move into December, inventory will continue to drop. The lowest point of the crazy 2021 year was April 30th, with only 307,000 single-family homes on the market. April and May, of course, are approaching the peak of the buying season. And this year, as homes were gobbled up just so quickly, active inventory never got a chance to get anywhere near normal levels of selection for buyers. Peak inventory for the year was 437,000 single-family homes. That happened in September. And as demand holds up late into the year, inventory is currently 10% below that peak. That's a normal pattern. As we're keeping watch on interest rates and what impact rising rates might have on the market, on supply and demand, I try to point out 2018. You can see 2018 here was the last time we had substantially rising rates. November of 2018, 3 years ago, we were just about to peak that mortgage rate climb before they started a 3-year decline. And so you can see how available inventory responded by this time of 2018 to that rising rates environment. In November of that year, available inventory was actually only down a couple percent from peak. And so inventory stayed elevated well into November. And it wasn't, though, a catastrophic change to the market. The market didn't shut down. But if you were selling in the fall of 2018, you definitely could feel the change. I remember sellers worried about that it was about to get worse too. So that's the pattern to watch for in 2022, if we actually see mortgage rates rise. But rising rates, should they occur, won't be visible for several months. They won't be felt for several months. So when we take the current inventory levels and we project our normal seasonal declines, we can see that we'll probably end the year just under 300,000 single-family homes active on the market. That'll be lower than our record point for 2030. It'll be lower than we started 2021. And it means that 2022 is going to start the year with record low supply and still very high demand. As continued from last week, we still see no measurable impact from homes being listed for sale as a result of the end of the pandemic mortgage forbearance process. Certainly not enough to make any impact in the curve for the projected for the rest of the year. The dashed line here shows what we can expect each week through the end of the year. We can see demand because, for example, the immediate sales have remained robust as buyers and sellers are getting their last deals done before the holidays. With almost 23,000 immediate sales this week, the phenomenon of homes going into contract within hours or just days of listing shows no sign of abating. I saw a research report by a group called the Broker Resource Network this week. They call this phenomenon 0 days on market. They describe it as a competitive threat that emerged after a policy change by the National Association of Realtors. Which went into effect May 1 of last year. So this just coincidentally, this policy change happened right when demand skyrocketed for homes during the pandemic. It allowed more transactions to take place before the home was publicly listed for sale. Then they get listed and marked sold immediately. It's unclear to me how much of our immediate sales phenomenon is a function driven by the policy change and how much is by sheer demand. But it seems likely this immediate sales is going to continue until such time that buyer demand actually backs off to some much more normal levels. That transition is not anywhere in the data yet. Maybe mid next year before it really has an opportunity to show up. So the continuing theme of tight supply and unabated demand means prices are still plenty robust. The median price of a single-family home in the U.S. remained unchanged this week at $385,000. Prices will adjust down over the next couple months, but there's no sign of rapid decline. Keeping an eye on the leading indicator here, the price of the newly listed homes, that's the cohort of properties coming to market each week. It actually ticked up this week to $354,900. You can see the price plateau we've been in for the new listings. It continues for at least one more week. The new listings price will very likely dip for Thanksgiving and again for Christmas before resuming the normal climb in mid-January. So that brings us to finally, this week, we'll look at the pattern of annual home price gains. With the median home price currently at $385,000, that's 10% higher than last year at this time. And remember that the headline numbers you'll see reported on transactions, home price gains and transactions, it's still going to be elevated because it'll be higher than what we're reporting here because they're still reporting on transactions that happened several months ago. So you can see how the dark line here is aiming to finish the year at 10 or maybe 12% price range gain for the year. But because the beginning of 2021 was so strong, the beginning of this year was so strong, it's going to be difficult for price gains, percentage-wise, to repeat such big leaps over the next year again. Okay. That's all the time we have for today. Home buyer demand is remaining plenty robust as we approach the holidays, and home prices are not yet really slowing at all. So if you're a realtor and you're working with buyers and sellers right now, you want them to take action before or in the next year, if you're dealing with clients who need to understand conflicting headlines about the economy and the real estate market, then they need you to get them this data every week. To do that, go to altosresearch.com and book time with our team. There's a link in the description below. Click that right now so you can help your clients right away. Also, don't forget to subscribe to the YouTube channel so that you never miss these videos. And that's all we have for this week. See you next week.